Hello guys, welcome to Finance Decoded. In the previous chapter, we talked about credit scores, and today we are going to talk about credit lines, a system that most people really misuse without even knowing about it. Before we start, let me ask you something. If your credit limit has suddenly increased from $2,000 to $5,000, and do you really think you have become a little richer? Well, that's not true, but most people act like they did. And that small misunderstanding is something that destroys your financial discipline completely. Today, we are going to break down in easy words what a credit line actually is and how to use it strategically rather than using it emotionally. A credit line is the maximum amount a lender allows you to borrow for a specific period of time. If your credit card says your limit is $5,000, that $5,000 is your credit line. It is not the money you own, it is your borrowing capacity. This is a small difference, but it actually matters. Think of credit line like an oxygen in a tank. Just because the tank holds more oxygen, it does not mean that you have to breathe faster. The size of the tank gives flexibility, but the way you use it determines your safety. Now here is where this connects with your credit score. There is something called credit utilization, which simply means how much of your available credit limit is you are using. If your limit is $1,000 and you are using $900, that's 90% and you seem risky to lenders. This signals dependency. Even if you pay back on time, it is highly recommended to use 30%. Even if you are using more than 30%, you need to be more strategical and more practical about it. Now, here is something that most people do not realize. A higher credit line can improve your credit score without you even spending more of it. Example, your limit increases from $1,000 to $5,000 and you are spending the same amount of $300. Now, that 30% becomes the 6% of your total limit. This makes you look less risky. Same spending, more benefit, better credit profile. That's a strategic credit behavior. But here's the mistake that most people make. They treat credit limit increases same as they treat their income increases. They think they can spend more, but that's not true. This is how the system controls you. Because when you spend more, your utilization increases, your profile becomes risky. The system rewards discipline, not excess. And lenders increase your credit line for one reason, risk management. If you show consistent payment history, low utilization, you look predictable. And predictable borrowers are more profitable. But excess without control creates a long term debt cycle. A credit line is a tool. Used correctly, it increases flexibility and improves your credit profile. Used emotionally, it becomes financial burden. In the next episode, we are going to talk about something that surprises most people. Why closing a credit card can actually lower your credit score, and why sometimes keeping an old credit card open, even if you don't use it, is the smarter move. Because once you understand how these pieces connect with each other, you stop reacting to credit, you start controlling it. Thank you.